Hello everyone, welcome to MC Accounting Series. In today's class, we'll be looking at bank reconciliation statements. Performance objectives. At the end of this class, students should be able to explain the following. 1. Dishonored check. 2. Uncredited check. 3. Unpresented check. Commission interests. Standing order. Direct payments. 2. Define bank reconciliation statement. 3. Interpret bank statement. 4. Adjust the cash book. 5. Reconcile cash book balance with bank statement balance. 6. State reasons for disagreements between the cash book and the bank account. 7. Write short notes on bank statements. Introduction. A business enterprise will record money paid into the bank and the sum drawn from the bank with checks in cash book. On the other hand, the bank will record all the transactions in its own books. The book which the bank prepares showing the transactions between it and the customers is known as a bank statement. The bank statement is the book which the bank prepares showing the transactions between it and the customer. As a matter of necessity, the balances of the cash book and the bank statement must be equal. But at a given date, the balance of the cash book is unlikely to agree with the balance on the bank statement due to certain reasons which will be explained later. When there is a difference between the balances, then there is a need for reconciliation. Bank reconciliation statement can be defined as a statement that is prepared to reconcile the disagreements of the cash book and that of the bank statement. The reconciliation is necessary in order to test the accuracy of the postings in the cash book by reconciling the balance of the cash book with that of the bank statement. Next, let's look at the reasons for disagreements between the cash book and the bank statement. The timing and information differences which can cause disagreements are: 1. We have unpresented check. 2. Uncredited check. 3. Dishonored check. 4. Bank charges and interests. 5. Standing order. 6. Dividend. 7. Credit transfer. 8. Errors by the bank. 9. Direct debit. 10. Other errors like undercasting or overcasting of the cash book balance brought down. So now we are going to look at the meaning, the effect, and the correction of each error. So we are going to look at the meaning, the effect, and the correction of each of these errors listed. Let's look at the reasons for disagreements between the cash book and the bank statement in details. 1. Let's look at unpresented check. What is an unpresented check? These are checks drawn or issued out in favor of somebody but have not been drawn from the bank at the time of preparation of the bank statement. The checks can be delayed for months if the recipients fail to pay them in. The firm had credited the cash book with the check issued out, thereby reducing the balance of the cash book, but it had not been deducted to the bank statement, so the balance of the bank remains the same. The effect: the balance of the cash book is less than the balance of the bank statement. Correction: unpresented check must be added back to cash book balance. Uncredited check: these are checks received and entered on the debit side of the cash book but have not been entered on the bank statement due to lateness, or the bank statement must have been prepared before the checks were paid in. Effect: the cash book will show a balance that will be more than the balance of the bank statement. Correction: uncredited checks must be deducted from the balance of the cash book. Dividend: this is the part of profit for shares held by the customers paid directly into his bank account. Effect: the balance of the statement will show a balance that will be more than the balance of the cash book, since the dividend would not be reflected in the cash book. Correction: dividend must be added back to the balance of the cash book. For example, let's say Mr. James made a payment directly to Mr. Morgan's account. As he said here that the balance of the statement will show a balance that will be more than the balance of the cash book, since the dividend would not be reflected in the cash book. Let's say this was a transaction, so Mr. James made a direct transfer to Mr. Morgan. So that transfer, let's regard that transfer as a dividend. If that is the case and it was made directly into Mr. Morgan's account, it means that Mr. Morgan's bank account will show a balance that is higher than his cash book balance, because the transaction, the dividend did not pass through the cash book, it went directly into his bank account. Next, let's look at standing order. This is an order by the customer to the bank to make regular payments to somebody. For example, hire purchase installment. It can be weekly, quarterly, or yearly. The effect: the balance of the bank statement will be less than the balance of the cash book. Correction: standing order must be deducted from the cash book balance. Dishonored checks. These are checks received from the customers and paid in by the firm, but were rejected by the bank as a result of wrong signatures, incorrect amounts, etc. The dishonored checks have not been reflected in the cash book. So the effect: the balance of the bank statement will be less than the balance of the cash book, since the customer have accepted the check. When we accepted the check, we have recorded it in our cash book. On going to the bank now, it was rejected. The balance of the bank statement will be less because the amount we recorded in the cash book will be more than the amount in the bank statement. Correction: the checks must be deducted from the cash book. Since we have earlier added it to our cash book, we must deduct the amount so that it will be equal with what we have in the bank statement. There are also other reasons for dishonored checks. 1. There are cases where the amount in figure is different from the amount in words. For example, in your check slip, you wrote 5,000 naira, and in words, you now wrote 5,500 naira. In a case like this check will be dishonored. So your amount in words and your amount in figure are meant to be the same. There is still another case where your check will be dishonored. Normally, checks are considered stale after 6 months. Stale checks are dishonored. The last one, when there is insufficient funds in the accounts. These are reasons for dishonored checks. Here we had wrong signature, incorrect amount. We went further to give other reasons. And when the amount in figure is different from the amount in words, if it's a stale check, or there is insufficient funds in the account. These are all reasons for dishonored checks. If the question might give you a particular scenario that they might not specifically say to you that this check is a dishonored check, but they might give you a scenario that the check was a stale check. So you know that a stale check is a dishonored check, or that the amount in words was different from the amount in figures. You know that is a dishonored check, or that there was insufficient funds in the account. So automatically you know that the bank is going to dishonor the check. Dishonoring a check means that the bank is not going to pay that check. The bank is not going to give attention to the check.